morning, everyone, and welcome to the European crossover webinar. And we've seen the euro going and slide back towards this 1180 that we had on our buy chart support. Not quite 1180, but just about there. And obviously, the cash dollar move even further higher. We said that we could move around in this area, and really, unless the cash dollar index, we have over here 97.45. And when we looked at the cash dollar index, and we're just above 97.45. Try to open up, but here's that 97.60. Now, like I said, we tried to make it not such a wide swath. If you look here, you can see here on the 96.60, and really we had this even pushed out, and I said, well, that's pretty wide. So we did give it the 45, but we've gotten just above that. But you can see we're pushing this upper range here. One other market that we did note yesterday, if you're with us on the daily roundup, was the Canadian dollar. And we had talked about this going to this level. We just got there. The market at the time, we were trading at, I believe it was 31.10 at the time, and or just above 31.10. I think we'd made it up to like almost in the upper 31 teens, and we were just around 30. We'd eased back just a hair bit. And I said, the market might pare back a bit, but it's going to make a, target is going to be 31.42, which confluences with 31.47 to 23%. And I had mentioned that in the chat room also. It was going to go back to what I called the old OL, the old 31.42, which had been important before. And I mentioned the roundup. Well, it actually challenged us 3 different times, and that would make sense, is that would be the target that they would go to. That's the only significant one here, other than cable continues to go and slide back in here. Still weakening here. I'm sure Boris Johnson is going to be the prime minister, and obviously the market's not too thrilled about that. Dollar yen has managed to venture up a little bit higher here, obviously with the dollar moving up. And looking here in the cross rates, the euro Kiwis finally managed to hold just a little bit, maybe a little bit of a bounce up here. Finally. The guppy's still sagging. We're going to move into the boons. Boons will continue to right at their highs. Be just one moment. Obviously, this is, as I've said before, aiding and abetting the euro making new lows as these boons continue to move price-wise even higher. Obviously, inverse would be lower yields here. Gold has continued to sag in here. One of the guys that asked me on Sunday, so I thought there was a chance that the gold could make it into the single digits. Now, one thing with these rates holding up, that should keep it from falling too further. We haven't gone into the single digits yet, but it certainly took that dip. Obviously, from where we'd come and the market taking a pause back here. Also, not that I don't think it's as important, but the dollar moving higher certainly hasn't helped. His gold was a little bit on the back foot anyway, so it just helped, push it for the back or make it easier for them to move lower. Coming in today, we've got monthly home prices, existing home sales, Richmond Fed, and we do have EU consumer confidence flash number. Then the later session would be Kiwi imports and trade balance. and also manufacturing PMI right here out of Australia. But that would, for most of y'all, roll into the next day. Here in the States, it'd just be very late in the session or later day. As I said, with the exception of the dollar CAD making that run up here to 31.42, not a whole lot, has really happened. And obviously the dollar pushing higher. We'll take a look at the news. The U.S. debt deal hoists the dollar to a 2-week high and the pound sags. The dollar edged to a 2-week high versus its rival on Tuesday after President Trump and congressional leaders reached a deal on Monday on a 2-year extension of the debt limit, dousing fears of a government default later this year. This takes the threat of yet another debt ceiling drama off the table for 2 years, by which many of us fervently hope that a set of rational politicians will have taken office, and this whole pointless recurring drama will have done away with this. Yes, please, please, please. Obviously, you know what I'm talking about as far as this part of this thing. I would love to see that. The New Zealand dollar was the biggest loser after the Bloomberg News reported that the country's central bank is refreshing its strategies for unconventional monetary policy. The euro has struggled against the dollar, but held firm at a 2-year high against the low-yielding Swiss franc on rising concerns that the Swiss National Bank may intervene to weaken the currency. While levels below 110 francs per euro is considered intervention territory, broadly unchanged side deposits from the SNB, the clearest indicator of the Swiss Central Bank purchasing francs, indicate authorities not unduly worried about the Swiss currency strength for now. The dollar's gains were capped in a broadly range-bound currency market as investors waited for the outcome of a policy meetings at the ECB and the Federal Reserve. While the ECB is widely expected to signal a dovish policy stance at Thursday's meeting, the Fed is expected to cut interest rates by a quarter point next week. The pound was the other notable loser on the early London trading, with British currency sliding towards the mid-124 ahead of the results of the Conservative Party leadership contest. Boris Johnson is widely expected to win and replace Prime Minister Theresa May. Concerns that Britain will crash out of the European Union without a deal have grown after Johnson said he would pull Britain out of the European Union on October 31st, do or die. Johnson expected to become the new prime minister, so there's a real chance of a hard Brexit, said Takuya Kanda, general manager and research at Gaitami.com. And sterling on defensive mood, all concerns about no deal. The sterling was on the back foot on Tuesday as investors worried Boris Johnson, in the front runner to become the UK's next prime minister, would trigger a hard Brexit from the European Union, widely seen as a major risk for the British economy. The euro briefly touched the lowest level in 5 weeks due to the growing expectations that the ECB's Mario Draghi will signal a rate cut in September at a policy meeting later this week to keep inflation expectations on track. The New Zealand dollar fell after the Bloomberg News reported that the country's central bank is refreshing its strategies for unconventional monetary policy, but trading in other Asian currencies was subdued as investors awaited major developments in the China-U.S. trade negotiations. The dollar edged higher against the yen, but was hemmed in against other major currencies on expectations of U.S. Federal Reserve cut next week. Speculation on the likelihood of a no-deal Brexit and questions over how far central banks will ease monetary policy are likely to set the tone for currency markets in coming weeks, traders and analysts said. Johnson is expected to become the new prime minister, so there's a real chance of the hard Brexit. In the short term, further declines for the pound could be limited because positions are already very short in the medium term. Sentiment for sterling will remain soft. The pound traded at 24.59 with a striking distance of a 27-month low of 23.82. Sterling has fallen 3.7% versus the dollar in the past 3 months due to uncertainty about how Britain will avoid a no-deal Brexit from the EU. Britain's Conservative Party will announce the results of the leadership election on Tuesday, with Johnson widely expected to win, setting him to become a prime minister on Wednesday. There's growing speculation Johnson will put Britain out of the EU on October 31st without a trade deal in place. Hedge funds have increased short positions on the pound to a 10-month high in the week to July 16th, according to the CFTC, and the New Zealand dollar fell 0.4 to 67.34. RBNZ has become scoping project to refresh our unconventional monetary policy strategy and implementation. The RBNZ kept the official cash rate at a record low of 1.5% in June, but warned that interest rate cuts may be necessary in the future. The Bloomberg story has struck a nerve because it can be linked to speculation about a rate cut in the next policy meeting, said Yukio Ishizuki. It's possible for the QE to get a little lower. The currency market is focused completely on central bank policy moves. The euro briefly fell to 11.91, the lowest since June 19th, as traders awaited the ECB's policy and Draghi's comments about a news conference on Thursday. Traders see a 43% probability that the European policymakers will lower a key deposit rate by 10 basis points to minus 0.50 to combat risk from global trade tensions. So we're going to start with the bias chart. Well, no change here. It's going to be 1180, and as I mentioned, we're relatively quiet. Resistance is going to drop down to 1247. Yesterday was very, very quiet, and I'm not seeing any real changes here. As I said, we're not moving a whole lot. We did see the Kiwi come off a bit, so that allowed it to weaken in some. But, with the story of coming out the Bloomberg. But really, as I mentioned, not really a whole lot of changes. Euro, it's going to move down here. There's 1180. So no changes. I mean, we're going to just see where we're at. This is our support. I don't know if we're going to break even lower. We may just kind of hang around here. Obviously, the door's open with ECB to tag this 1128, but we shall see. And certainly, like I said, this 1285 has really kept this market in check. We'll have to see what we dance around tomorrow, but don't expect necessarily any further bigger moves today. Moving into the cable. Certainly the door is open for this market to go back and test right there. The 2408 is where we have some support, and we'll move it down to that level. At this point, that's where resistance would come in at 2509. And that might even be a stretch, to be quite honest with you. But we'll go with 2509. And we'll move into the Aussie dollar. We finally paired back just a bit here on the Aussie now. This open up here, 727, really has opened the door, as I said, eventually to 7180. We've actually run into 77 and taken a bit of a pause here. Looking back as far as support, we're going to the 2-hour chart. And for now, same thing, relatively quiet markets. We'll stick with the 69.82. The difference is on the upside. We're going to look right there. You see here, 70.52. Well, we paired back here with the Kiwi, and really not a whole lot if you think it's, the story. It's not, like I said, we've been so bullish here. How far can we go and pull back? Let's go on and take a look here on the 2-hour chart. These markets are very, very quiet now in light of us just waiting for two key events, which is going to be the ECB and the Federal Reserve, or FOMC. We've come into support here. You can see the market. There was our bias chart support. But I think we can work a little bit lower, especially after that news. So the new support, although that is held so far, is going to be, for now, isn't saying a whole lot. Let's allow them to take out the stops. 66.85. But the bias chart from yesterday and today is actually held. We're just one pip above it right now. Resistance here is going to be 67.56. 67.56. And let's go move into the dollar CAD. Well, we saw quite the turnaround. We talked about this on Friday after this market had rallied up and then turned around and gave a big chunk of its gains. It certainly looked like now this week we could finally come down to 29.95. Well, we dipped down into what was the old support, one of the old support levels of 30.43, if you remember that. Well, we dipped down to 30. There was 30 right here. 30. I think got to 40. Yeah, 30.40 right here is where the market closed. We closed into the 59 or 30.60. We dipped down to 30.43, and then turned around and really turned things around. And when we came on to the daily roundup, we had just gotten up to like around 31.18. I think we're then eased back just a bit. So it mentioned that when we looked at the 2-hour chart, that we were looking for a move here to 31.42, which confluenced with 31.47 to 23%. And you can see here we just hit it right to the pip here at 31.42. If they want to test a little bit higher, we'll give them up to 47. So we'll put that as our bias chart resistance. Support now, obviously the market's really turned around, and I think any dips down to 31 even, 31.01 are going to be bought. So let's go 31.01. Now we'll move on to the dollar peso. With the exception of the euro extending its loss a little bit further, which is really no news, and the dollar CAD, there's really not much movement at all. Well, the Peso is trying to work a little bit higher. We talked about this importance of this 1892 and the real resistance. I think we even put it up here was we gave it a stretch, which is 1915, I believe. Yeah, there was some support 08, but I was like, you know what? 15 is what's really going to matter. We actually made a little jump up towards that 08 and kind of paired back just a bit, but we're going to stay with 1915 here as the resistance where the market needs to go to. I never did get back in the Peso. I really don't have any interest in getting into the Peso. I mean, unless you want to sit there and hang on to it, and that's just not what I do. I've told that, mentioned that before. Is that it's not my trading personality. Like I said, you know, I did come in at, I think it was 4, and then just under 19 even, I believe it was, and I got stopped out at 1896 when all the dollar started losing, started pairing back. And, but nonetheless, I started strengthening. But anyway, nonetheless, I did not hang on. I would have had to hang on throughout the weekend. Not something I would do. But this is what I thought that we were going to get to when I first got into the position. I thought we'd make it back up to 8 at the time. But that was, I think it was on Thursday, I think it was. But it's still going to be 1915. And we'll take a look at the 2-hour chart. If you're looking on a very short-term basis, we know that 1892 is important, but on a short-term basis, if it's going to hold, this is going to be 1901. So we'll put this up. And let's go move into the dollar again. We're starting to work up a little bit higher in the dollar yen. I think we're best to look at it on the 2-hour chart. Certainly with the move in the dollar to allow this this pair to work a bit higher. Resistance is going to come in. You can see that level coming in right there at 833. Remember the 832, so we'll call it 833. Split the difference right there. Call it 774. Well, the dollar's trying to push up higher here. We had the 97.45, and we're saying we're stuck in this area here, bracketed between 96.50 and 97.60, and we still will have to see continued movements to break above that to suggest, you know, that the market continue to move. Well, they did work out the budget deal with the ECB. They're probably going to be dovish, so. It's, you know, the resistance is actually going to come in at 97.64. We have 60, but if you look at this right there. Let's put this back to bullish. And take a look on the 2-hour chart. $97.17 for now. Let me move this just a hair bit lower. Call for 14. And with that, we'll move into the cross rates. Well, we've got a little bit of a gravestone doji here with the Kiwi yen. And we might finally start to see this market pare back. Looking at this level, we had the 73.15. Right there, you can see there. But with a pullback, obviously going to be well within reason under the circumstances with the story out of Bloomberg. That may allow us to eventually come down here to 72.55. Oh, there we are. We already had it there, 56. Resistance is going to come in right there, 72.96. And let's go into the euro yen. Well, still sagging. The only reason this is because the yen is weakened a bit. But this euro yen isn't even worth a hill of beans. Downside support remains 2074. Upside resistance, 2114. Certainly the euro has a chance to breach these lows. As early as tomorrow, but for today is today. And let's go into the 2-hour chart. It's going to be 59. Let's go and drop this just a bit further. 59.12. Really have to see a turnaround for this thing, and for the ECB to get this thing to rally. It depends on what they say at the ECB. We'll give it the 59.62 though, just in case. Well, finally seeing a little bit of a turnaround here with the Euro Kiwi. And just a little bit of a little mini hammer. And finding support right there at that 62.63. We look at it here. Certainly the Euro Kiwi is not out of the woods when you got Draghi. Find every way to cut that he can. He's the only central bank to ever been there that has never raised once. Have to think about how pitiful the euro is. With everything he's trying to do, it still can't get anything going for that. Let's go right there with 65.67. And resistance, 66.48. Let's move into the LCN. Still bracketed within a very tight range. We had 76.19. I don't see any reason to change that. 76.19, and on the downside, 75.69. I had 67, so no, 75. Let's move this to 75.69. $76.19, no change there. And we'll move into the guppy. Began to sag again, and support's going to be right there. No changes there at 34.26. Got 25, that's fine. And on the upside, 35.01. No changes. And like I said, we're just in very quiet markets overall as we wait ECB and Fed. And on top of that, it's summer trading. So, I mean, holy smokes. I mean, the double dose of intransigence, I guess you'd say. And looking at the sterling nod, well, looks like we're trying to head towards this bias chart support here, 76. Right there, you see it? Actually coming in right there, 76.80. We had this mark for 76.72. I feel more comfortable with the 76.72. There we go, right there. So we'll go 76.72, which is what we had here. And on the upside, we'll actually lower this here down to 77.47. And there's the bias chart. We're going in, moving to the where the bunds are. As I mentioned, we do have monthly home prices coming in, existing home sales at 10 a.m. Eastern, Richmond Fed at 10 a.m. Eastern also, and consumer confidence flash for Eurozone, 10 a.m. Eastern. You can see the bunds at all-time highs, still edged even a little bit higher than yesterday, above yesterday's close. And as I mentioned, gold, so after that stellar move, we've seen the market go and ease back quite a bit. My thinking is we'll go into single digits. Someone's asking if we make it all the way down to 1,400. I don't necessarily think so, because of where interest rates are. Okay, look at that, all-time lows for bond yields. So, but we certainly had our foray lower, and I think we have moved down here in the single digits, and that'll be well supported here. Other than that, that's about it. So we shall see you in actually the dollar index is on its high. We'll move into that screen quickly. You can see here the euro is now pressing lower towards that 1180, that buy chart support. The dollar index on its highs is 97.52. Dollar CAD still being capped in here, this 31.42, but we know that, as I mentioned, which will be now our buy chart resistance, which is 31.47 to 23% of the entire move back. Okay. Cable continues to remain a little bit under pressure. And Peso just holding up close to its highs. Thanks for joining us here on the European crossover webinar. I'll get the bias chart posted, and have a good trading day, although very, very quiet session.